Everyone, Akash here. If you're personally thinking to get a personal loan, because maybe it could be many reasons that people want to take personal loan, because you might have some bills that you wanted to pay off, but you have some high interest credit card you wants to pay off, or some other bills that you wanted to pay off, like you want to pay off your cars. So you have to few things you have to consider before you go to a bank and apply for a personal loan. What is your credit at the moment right now? Is your credit below 700 or is it over 700? That's the first thing you should check, because if your credit is below 700, even if you have a job, you could prove that you're working, you're making money, you know, still the interest rate gonna be high, because you asking for personal loan is a cash money. Its interest is always a little bit higher than any other loan. So you have to think about that. Let's say if your credit score close to 700 but not close to 700, there's a video you could check in my channel that how to fix that just very immediately, like maybe in a month you could just bump it up to like over 700. If you could get over 700, most likely you're going to get a reduced personal, I mean the low interest might be a little bit, definitely going to be a little bit less. So that you should consider that. And second thing, why do you want to take a personal loan? If your car, let's say you have an example, you have a car that you're paying really high interest right now that you wanted to pay off, and then you have to consider if you're going to a bank and get a loan, and that loan has a 10% interest, and your car you're paying 10 or 15%, whatever that your car you're paying for it. I'm just giving you example, a car, it could be your credit card bill, how much interest you're paying on that credit card bill. If you see it's not that much different, then you should not get a personal loan, because if it's not that much different, then that loan you're gonna take, you have to deal with it either 3 years or 5 years. So even you pay off your car, now you have to deal with your personal loan and paying that 10% interest for another 3 years or 5 years. It's a long run, it's not. But why you should take a personal loan? When is good to take a personal loan? Let's say if you could get a 5%, 5% if you get a personal loan, and paying your high interest credit card and paying off your high interest car or anything else, then absolutely that's a good deal, good way to do it. But if you want to do that, you have to have a more than 700 credit score. So if you have that, you go to the bank and ask them for a personal loan. Especially most of the bank that I personally, when I deal with them, I see I mean North America, I'm talking about in New York, that if you want like around $15,000 personal loan, it's easy to get it. They don't check that many things. They just check if you have a job, your last year income, and currently how much you're making. That's about it. And your credit score. If you want more than that, they might check something else, or they want more information. But $15,000 normally is like 2-3 days. If you have, like you said, if you're working, you could prove your income, and like you have a good credit score, they'll give it to you. So let's see, you take that $15,000, but always go for 36-month personal loan. Don't go for 5 years, because your monthly payment gonna be a little bit higher. Let's say you get a personal loan for $15,000 for 5%. So your monthly payment will be around like $460, something around there, month. That's what's gonna be. But 5% interest for 3 years, you might pay around like close to $2,000 interest in 3 years, which is definitely decent compared to think about the credit card bill. If you have piled up, how much interest you're paying per month, you add that, calculate that, that could be much higher than that, and you could pay it up. You get a personal loan to pay off those. Don't use it for something else. Then you're gonna be in a really bad situation, because you took the personal loan to pay off the other bills, and if you didn't, now you have to make extra bill you have in your hand every month to pay. That's how it could be get situation a lot worse. So think about it. I know the cash, when you get it in your hand, do the right thing, pay it off, all those high bills and everything. Don't go for five years unless you really in a situation that you cannot pay it off. Then you go for 5 years, because 5 years, even let's say if you have a credit is not as good, maybe it's below 700 or close to 700, and you get 10% interest in a 5 years loan for $15,000, you might be end up paying more than $5,000 in interest in 5 years, $1,000 a month. I mean $1,000 a year. So that's a lot of money. Basically you just giving to the bank for only $15,000. So you have to consider, and you have to deal with that loan for 5 years. So do you want to do that? So it's always better to get a personal loan when you're paying off something else, that's the only purpose you're taking the loan, to pay it off those things. If you cannot pay those things off and you think you're kind of person you're just gonna hold down to the cash and don't do it, then this is high, it's not a good idea, not a good idea at all. So hope this video was helpful to you. You could always ask me any question you have, and definitely I'll try to answer it in my channel. And if you think this video was helpful to you, there's many money saving tips you could find in my channel, and definitely consider subscribe to my channel. Have a great day.